who are looking for funding. So we would also like to give them as much as advice as possible in this session.
Well, Sonny, we are live. We have gone live.
Okay. Hi, everyone. Welcome to another section of VC TV, the Venture Capital TV from LATOKEN. Today, we have a special session from the Venture Capital Insights from the Middle East. Sorry, I have to switch one. The VC Insight from Middle East covering BioTech and MedTech. And we have a very fantastic line of speakers. I would like to start by asking each of you to give a short introduction about yourself. Then we'll go to the question and answer session. First, I'd like to start with Jade. Hi, Jade. Welcome to VC TV.
Hi, Sonny. Thank you for having me. My name is Jade. I'm a partner at Brunswick Group, a world communications firm. I've also been advising for the best part of 5 to 6 years, a handful of startups. I'm part of a mentoring. I'm part of a mentoring group, and I'm also a special advisor to NAPTA Health, which is a hybrid health tech company based in the UAE.
Okay, welcome. Thank you.
Thank you.
Ali, the next speaker we have is Ali Usman. Please, can you just give a short intro about yourself?
Hi, Sunny. Thank you. Yes, my name is Ali Samir Usman, based in the UAE, where I'm representing Jafam Management Consultancy. I've been an advisor and continue to advise a number of startups and investors across the region, with everything from deal flow to identify high potential investment opportunities and growth strategy plans for helping startups to scale.
Excellent, thank you. Karthik Bhatt.
Hi, just to give you a quick background, I've been in the Middle East for around 10 years, a retailer by background, also help a lot of venture capitalists as well as startups in sourcing funds and getting their strategies aligned. At the moment, I'm helping a telemedicine business and I'm helping a wearables technology firm as a startup and helping doctors in certain part of the world establish a practice for making house calls and delivering medical practices to the doorstep. So that's how I'm involved in the medtech space.
Wow, very interesting. Thank you, Karthik. Our next guest is Mohammed Salman. Please.
Hi, Sonny, and thank you for having me. And hello to everyone. My name is Mohammed Salman Anjum. I'm the Managing Director of Aventus Technology Accelerator based in Dubai. And we are facilitating the success of startups, especially in the zone of verticals of health tech and GovTech. So it would be very interesting to discuss a few insights about these two verticals, especially the vertical of health tech, which is going to be going to be having a limelight for the next few years.
Great, thank you guys. So that brings us to my first question. What are the recent case of investments that you guys are aware of, have made, or have advised? Jade, over to you.
Okay, sure.
So that's a good question. I mean, I think it's worth just saying that, health tech has been one of those sectors that has been relegated, to the back of VCs in terms of investment and in terms of thought process. The last sort of 2-3 years, especially in the MENA region, has been around fintech and that space. And I think health tech, we've seen some startups. So Venezia recently, I think it was in January, raised a Series D at, I've got my figures here, at about Vizetta, sorry, they raised 40 million in January. OKDoc did 10 million, and TB has raised collectively 8.5 million. I mean, those are the only 3 big health tech successes of note as compared to the other sectors. So it's it'd be hard to say there's a drought, but health tech hasn't really taken off here, in this region, especially in the UAE, which is a shame. But and for discussion, I'm sure at a later stage is post-COVID or during COVID now, you've seen a huge switch now, and telehealth and sort of other health health apps have sprung up, and there's been a huge shift. And some of the biggest VCs now in the region are looking at health tech, which is fantastic. So it's a difficult one because there just hasn't been a huge amount of fundraising. Those who have succeeded have done well, and I think we will see in the next 2 to 3 years a huge acceleration in health tech investments.
Thank you. But what did you just say, that you don't see huge amount of investments to the space, in the health tech space?
No. Sorry, in the next 2 to 3 years, we will see a significant rise in health tech investment. Absolutely.
Great. Excellent. Thank you, Jade, for that. Karthik, over to you now with the same question. What are the recent investments that you've seen in the region?
I would look at it differently. Over the last 6 years in the region, I have been noticing a very gradual shift from curative medicine to preventive medicine to lifestyle medicine, and moving on to the wellness medicine space. And with government investing massively across the GCC on healthcare as a sector, investments in the beginning were, I would say, very limited, with very few startups being in the space. But over the last 3 years, startups in the telemedicine space, startups in the doctor calls at home, startups in the wellness space. I haven't seen a lot of wearable startup raising funds, but startups in the telemedicine space that I have been supporting, a couple of them, have been successful to get into a second stage funding of around 3.5 to 5 million. And one of them in the third stage is looking at a funding of around 27 to 30 million. Let's see how it works out. But with post-COVID, with changes in the way normal is evolving, I think there is a lot of scope for startups to raise, provided the early startups or the technology changes is moving seamlessly and results are being available. Because with the way the startup scenario, the way the funding scenario has evolved, either in the West or in subcontinent, I think Middle East is on the cusp of a huge explosion.
Okay, good, great. Good to know that. Thank you,
I
Karthik.
see, if I were to, I have a lot of confidentiality clauses on some of them, but if I were to give you a perspective, I see at least 3 deals that I am personally associated with, to the tune of around 40 to 45 million. If they succeed, if not, they would at least come back with a 18 to 20 million funding.
Right. So are they
all of them? And see, all of them now, for example, if I were to look at a telemedicine, or if I were to look at a remote medicine, cyber medicine, it doesn't necessarily serve the Middle East. Though the startup evolves in Middle East, it's primarily targeted towards either subcontinent or targeted towards Africa. And hence, while it might evolve here, it might be funded by a lot of other partners in different parts of the world. So I'm very bullish about some of these sectors.
And
I'm very bullish about preventive and lifestyle wellness as well. Being a CEO of one of the businesses in the past, I have seen a massive, around 700, 800% growth in the complementary and alternate medicine space, which is where now a lot of businesses are investing, considering that it doesn't come in through the regular health compliance protocols, and risk factors are almost as low as 12 to 15%. There is a lot of telemedicine, a lot of supportive, a lot of robotics in the medicine coming in the CAM space, and which is where I again see a lot of investments coming in the next few years, not only through the venture fund route, but even through a debt investment route, where a lot of businesses might want to establish their presence in the Middle East, especially in UAE, Saudi, Bahrain, Oman, Qatar. And all of it also has to do a little bit with the change in the regulations. Health regulations were very, very stringent. They continue to remain stringent, but the governments of late have been encouraging participation. They are encouraging young businesses, new businesses to work hand in hand with the government in terms of establishing health practices, which is what is going to promote healthcare, and is going to promote medtech. BioTech would take, I wouldn't say it's going to take a while, but medtech is the first boom, maybe from 2021 to 2025. Early boomers is the way I look at it.
Yeah, Karthik, because I used to travel to Dubai quite frequently till last year before COVID-19. And a lot of investments were also getting done into the blockchain space. So all these companies that you're speaking about, MedTech, BioTech, what about the technology, the underlying technology? Are they?
So obviously, again, all of them would have a lot of confidentiality clauses, but I would say from a technology perspective, while all of them were historically dependent on associations with global players and global partners. Of late, in the last 3 years, I've also started seeing the technology being evolved or originating in certain parts of GCC and complementing each other. Use of blockchain, big data in medicine, I would say, while it's not 100% in, or I don't see it being relevant for at least another 2 to 3 years, people have slowly started moving. What retailers did a couple of years ago, 3 years ago, is what medtech companies are coming in. Integration of technology or integration of information technology to the medical space is taking a little longer than what is expected. But that's, I think, with a lot more VCs and a lot more funds coming in and a lot more attitudinal change coming in. Because historically, medicine was always a forte of doctors and medical professionals and would only become successful when they are in the early 40s, late 40s. It is now that there is a lot of investment coming in from technology background, which is supporting the medical fraternity, the way it supported a retail fraternity and an e-commerce fraternity 6-7 years ago in different parts of the world. So I think one needs to see this as a catalyst and incubate it for some more time. And it's not only about money; it's also, along with money coming in, it's also about competency.
Are you switched on somewhere else, because we hear a delay?
No, I'm here. I'm here.
Sorry,
I'm
okay, cool.
No. So along with the money, I think it's also about the competencies coming in and about the evolution of the market. So I think to cut it short, I think next 4 years are going to be very critical in the GCC space, in terms of investments and in terms of growth.
Okay, thank you very much for your insights. I'll come back to you with more questions. Next, we have Ali, who would be leaving in probably 30 minutes. So Ali, I'd like to ask this question to you. So what are the recent investments that you've seen or you've done? Because you are in the VC field, and so yeah.
Thank you. I wouldn't try and kind of differ too much from what Karthik and Jade have said. And I'll try and add something extra instead of just repeating the same. But in a nutshell, I agree with the fact that the healthcare space has seen a prioritization with respect to investments. This is not just on the VC side, but on the PE side as well. And that is primarily because of COVID-19. It's made everyone realize that they should have gone into healthcare a long time ago. And when you look at investments, it's kind of a no-brainer, simply because, if you look at the industries of healthcare, education, and food, they're the primary decision verticals when it comes to the first place your paycheck goes. And everything else is a luxury purchase, but these three are regarded as necessity. And within healthcare, you have, like Karthik very rightly mentioned, multiple sub-verticals, right? You have patients who are holistically on some sort of lifetime treatment path. This is with respect to chronic illnesses, people who are on daily medication for the rest of their lives, and really cannot reverse the state of their medical and healthcare conditions. Similarly, you've got preventative and well-being based medicinal and healthcare related offerings. These are more for keeping people healthy, keeping people well, keeping people fit, to prevent any unforeseen healthcare occurrences that they may happen to them in their lifetime, and to extend their life, so to speak, right? And then associated with all of the above comes an approach towards service delivery of these two areas, or data with respect to these two areas, which can be utilized by not just the consumers of these products directly, but with partners and B2B businesses that they may plug into to create value for. So generally, I think investors have realized that healthcare, like the other two important verticals of food and education, were ignored for some time. And everyone has rushed into the industry to identify the right opportunity. But with that, so it's a good time to go be in healthcare, right? It's a good time to kind of build a healthcare proposition. But just like COVID has made everyone's side business the sourcing and trading of PPE equipment to earn an extra buck, Startups and founders have realized that there's a lot of investment dollars going into this space. And all of a sudden, you have people who have been working on healthcare oriented solutions for some time now, and building their MVPs and testing their product and working with the regulator and trying to see which market their solution works best in, and trying to raise capital against it. And then you have the pretenders who've just rushed into this space and are not really innovating. They're creating another doctor-patient platform, or they're creating another telehealth platform. And that's not innovation. That's just more noise where people have already been playing. So I think that's kind of the downside of the popularity that HealthTech as a space is seeing currently today. This is globally, just not regionally, right? So it exists everywhere. And but the good thing is it's created attention and driven attention towards the HealthTech space in the region. It's also important to mention when it comes to investment, right? The reason why HealthTech hasn't really taken off, and I agree with what Jade said, right? It's a bit too early for biotech. And the reason it's a bit too early for biotech is because by and large, biotech may require a lot more money to fund, to innovate than HealthTech does. And just generally, VC or risky asset class investment is a new phenomenon in the region. So there isn't that much capital to throw away, especially with the fact that industries that rely on technology-based innovation still aren't fully digitalized, right? I mean, most companies still don't use CRMs in the region. How are they going to manage healthcare data? And these are all factors that limit adoption of technology across industries, not just healthcare and biotech. So I think biotech is some time away. And biotech, even globally, is now being done only in the most mature digital markets and led by some of the largest healthcare pharma companies in the world, right? It's not, there are a few small guys doing biotech, but they're really, really well funded and backed by the big boys sitting in mature markets. I think the Middle East and our region generally is just starting out. I think investment is a factor of both capital available as well as market opportunity. And market opportunity in our region varies from country to country because some countries have a large population and some countries have a small population. Some countries with a large population have a very small ticket size appetite per customer. Some have a larger one. Some are pegged to the US dollar, some are not. Some have data regulation in the healthcare space. Some don't even let you operate with the health tech business, right? And all of those factors determine investment flowing into the space. Which I think is growing, and I think it will continue to grow, and I think there will be opportunities. But it's going to be the most progressive governments and markets in the region that will first kind of try and take advantage of that to disrupt the industry.
Right. Very, very good insights, Ali. I mean, how does blockchain technology plays a role in health tech space right now?
So, I mean, there's a lot of, I work with a lot of startups, right? Some of them using blockchain technology, right? There's a centralized patient data management solution that's built on the blockchain and wants to decentralize patient records for access across the kind of value chain for healthcare. So there's lots of these initiatives that are using blockchain as a technology, right? But even blockchain as a subject is so vast. Its applications are boundless, right? How you structure it, how you look at it, are tokens a factor? Is it something you're trying to build out because you want to build a cryptocurrency attached to it? Is it a pure form or functional factor? Is regulation supporting that with respect to data laws and data policies? I think a lot of that will determine whether blockchain startups that are operating in the healthcare space will manage to take a significant chunk or gain enough traction quickly. But generally, as someone who's a fan of blockchain as a technology or an enabling technology, I think it is a big part of the future once governments and regulators get their heads around how to kind of regulate it and how that kind of fits in with how the world business information and data flows today. And when that happens, it will be a big part of not just health tech, but every single other industry, because really it's going to power how data is transmitted and communicated across mediums, devices, and even people. So that's kind of my approach to blockchain.
Okay, great, great. Thank you, Ali.
I have a view on this as well. I'm sorry to interrupt, but I've been doing a lot of work with a couple of businesses on blockchain in healthcare, data in healthcare. Uh, I agree with Ali on the compliance part of it, but my bigger challenge that I see these days is the medical industry. We are used to medtech or a fintech as an evolved industry, but the medical industry still hasn't reached a level where they might be able to put every ounce of data to use. So you might have a very strong data vertical that brings in every possible element of a consumer's or a patient's lifestyle, but more often than not, the healthcare providers are not disposed with an ability to use that information and channelize a practice that is relevant to a customer, which is where I think investments not only in building technology or building blockchain competency or building blockchain availability in the business, but also more investments need to be made in building competencies around the healthcare businesses to make them agile enough to imbibe change and imbibe technological advances in the business, which is where I think Middle East compared to subcontinent and compared to Western Europe needs a lot more push. Even compared to businesses in South Africa or South Asia, Middle East requires that much more push in terms of building that framework, competency, and belief in that data and its availability.
So just to add, and just to add to that, I totally agree with that, right? But that's exactly where I say policy and regulation will play a big factor, because protectionism is a policy, right? I mean, if you're pushing medical tourism and bringing the biggest brands in hospital and healthcare to your country, then you're going to protect them from disruption any way you can, and that's where it comes in.
Right. Yeah, that's a very valid point, Ali. You are it, and thank you both of you. Mohammed, over to you, because I know that you run an accelerator, and yeah, please, over to you. What kind of recent investments have been made in the space? You are into health tech, so please enlighten us. Thank you. You're on mute. You're still on mute.
Yeah. All right. So first of all, taking the comments forward from Jade and Ali and Karthik, that yes, the crisis is always like a catalyst, and in some cases it's an accelerator for the technology adoption, and so is the case with the health tech in general. I have a figure of $206 billion mark that health tech would have reached by the end of 2020, but this is pre-COVID, and I'm sure it would be double by the end of the 2020. We will be reaching around the investment size of 400 billion easily, because the whole trend from March onward in 2020 is now mainly towards the health tech, or rather I should call it care tech now, because it includes the healthcare but plus biotech, and at the same time some wellness side applications as well. And coming to the trend of UAE or Middle East in general, how it is like seeing this vertical. I think 3 days back, I was a judge for a competition named as Startup Battle. There were 10 different global projects, but it was for the Middle East market. And there were a number of investors from Middle East, especially from Dubai. So the winner was, not surprisingly, a care tech project. So it was for the wellness kind of a thing. So that shows the trend very, very clearly where it is going forward. And we see more and more consumers are embracing digital health, and there are like obviously the investment will be flowing in. About what happened in the previous years, obviously it was not very much a healthy thing, but moving forward, as this vertical is like picking up, I think it will be like a major vertical for the investors to think first for the investment, and that is happening. About the blockchain, there was like a discussion happening between the last, especially a few last question was relevant to the blockchain technology intervention in the side of the health tech. Yes, our project is basically what we have been accelerating for last like 4 or 5 months. It's rather we started it in the month of March, MedSlock suite. So it has basically a blockchain-based resource management system for COVID disease. So it is mainly a GovTech plus HealthTech project, which is having a modules of the disease management system, quarantine, including patient and all that. So there is a very, very big implication of blockchain, and it's the first of its kind of like patient management system in the UAE or in the Middle East, which is on blockchain. It is ready to be.
HealthTech. So is it supported by the government or is it endorsed by the government?
It will be, because this is basically the primary user, first of all, will be the health ministries and the command centers, or we can say central authorities of the governments who are like managing the COVID outbreak. So it has the element of health care, like diagnosis of COVID, and again with the help of AI and blockchain, as keeping the records private, and plus the with the integrity and with the security, and the ecosystem efficiency is far greater than what you can achieve through the normal centralized databases. So there are a number of benefits that triggered us to get into this project, and as in 2 weeks time it will be ready to be rolled out. So there is going to be a proper showcase of blockchain in health tech in like a few weeks from now.
Great insights in terms of the technology adoption by the government and mass adoption. Thank you, Mohammed, for that. Which brings me to the next question I have. So what has changed with COVID-19 in terms of institutional and private equity investment? If anything has changed at all in the space? Jade, I'd like to go with you first.
Sure. I mean, good question. I was actually going to look to pose that question just to my, just the fellow panelists as well. Is that, listening to what's just been said about, there's now so much interest. Kartik was saying, he's looking at 3 deals and it's all super active. I think, that's right. At this moment, it's active. But why has it not been? As you've just said, like 3 or 5 years ago, there was absolutely no interest in this space. And what's made it change? Is it because of COVID and telehealth? Or is it just because, it's the new hot space to invest in? I mean, I still think, there's still a lot to consider here. If you look at telehealth, for example, when telehealth was open, launched, let's say a few years ago, for example, there was no real desire to use it because of how insurance or because of how health insurance works in this market. You have to have health insurance, and because it's technically it's free. You pay a sum, or your work will pay for you. If you're sick, you just go to a clinic or you go to hospital. So the last 10 years has been dominated by hospital players, sort of NMC, Aviva Group, and others who've just gone out there and just bought more hospitals and just expanded. I mean, that's into clinics and into dentistry and so on and so forth. Telehealth has lacked any pickup because there's no point trying to get onto a screen and speak to a doctor when he's not going to tell you much if you're not feeling well, or you just don't trust it. You rather just go to clinic. Right. Suddenly, COVID hit. You are now stuck at home, and if you've got a sick person or you've got a sick child, you're going to use telehealth, and suddenly all those, in my view, all the VCs and high worth individuals and sort of others who are at home, who are suffering the same, suddenly have got to use these products, these services. So suddenly all of them are like, oh God, this is interesting. Who's investing in this space? Why is no one investing in this space? Probably calling up their principals and partners going, we need to get into health tech. Where's the next, telehealth? But I personally still feel that there are issues around. I love the whole, crypto, blockchain use. And I think that's it's very big. I put some money in personally myself a few years ago into a similar company that does patient data records down in Kenya. Given how the setup of it, down in Kenya actually, just because the Ministry of Health was backing it, and actually to do patient data record in a place like Kenya where there are lots of villages that are hundreds of kilometers apart from each other, it plays perfectly into testing it and to retesting it and making sure that it works, and it's garnering good success. But when I look at the market now, and I'm sorry if I'm slightly biased, but I've been advising Napta Health, which is a hybrid healthcare company, so both traditional and digital. And I personally, I see the future in the next sort of 2 to 3 years being one of hybrid. I think, the sort of adaptation of technology won't be as rapid as we all believe, because, we're now getting fatigued of telehealth again. We actually want to go see a doctor. We want to go back to clinic, but we're not just going to drop it, all completely. We're all going to see a sort of hybrid, and where we haven't seen yet is actually more of the other subgroups that haven't been mentioned. For example, femtech. Femtech is garnering big support down in Europe and in the US, and really and HealthTech around products. People want to send you their products to see if you are sick or not, or if you've got an ailment, and then you sort of upload it. You sort of upload your results onto the app. And then, either you then go into a clinic to do further tests if needs be, or you get your results and you'll see it. Hence the hybrid model. So I in simple terms, I think, VCs have, principals at VCs who've stayed at home have suddenly seen that, they need health tech, and, they've all taken a huge interest. And I'm just going to leave you with a quote from, Nor Swade, who is head of global ventures and one of the most well-known VC investors. And sort of after she invested in a Nigerian sort of patient doctor, patient data company a few months ago, she said, health tech will be the next fintech for the next 5 years, which is true. That's exactly how I see it.
Yeah, great. And because of COVID-19, it has accelerated the digitalization of the space. Thank you. I mean, Mohammed, you have something to add. Please go ahead.
Yeah, the question of Jade, why it was not picking up. Obviously, there is clearly a demand and supply thing. So whatever is in demand, investors will go towards that side to invest. And people will definitely be adopting that thing. So it's clearly the formula of a demand and supply, which is in favor of health tech for obviously for a few more years from now. Second thing is that it's a very challenging space. I'm been in the space of digital transformation for a number of years. The time I'm having in in the health tech side, and the kind of compliance regulations, although let me give a hint here that governments and regulators are bit soft on the new innovative applications, and they are giving a little bit of, they're compromising on their deployments and saying, okay, we can delay the compliance issues, because at the moment, again, demand and supply, they need them to deploy as soon as possible for the efficiency improvement, and they are sort of bit lenient. But believe me, it's one of the toughest sector when fintech people say is hard to comply with. No, it's a health tech, which is probably the most difficult vertical for the compliance and regulations. And that's probably the main reason why the non-healthcare people, just tech people, were not willing to jump into this space easily.
Right, very much agree to those. Yes, Ali.
Just to add a little bit to what Mohammed and Jade was saying, so I see a lot of different evolutions in this space as well. Primarily from a pharmaceutical point of view, and this comes in from the challenges that the business faced during COVID. If we analyze, our ability to respond to COVID was very limited. Our ability to come up with a solution to COVID was far bigger, far more limited than that. And hence, these are two sectors, and our ability to manage COVID was limited. Hence, I see, and this is something that I've seen in last 12, 15 days, a lot of emergency response businesses or emergency response healthcare tech platforms are coming up for use. I see a lot of blockchain and I see a lot of AI coming into the pharma business as well for a much faster predictor algorithms to come into play, which would help you synthesize drugs, synthesize solutions. And I see a lot of automation in the healthcare space, primarily from a robotics point of view, wherein human intervention is minimized to prevent either further damages or further scope of contamination. Without naming them, I have 3 to 4 proposals that might be getting ready by the end of August, which might primarily be in the automation in pharma and automation in the healthcare space, which would necessarily be talking about that. Along with that, a lot of lifestyle healthcare and lifestyle health tech algorithms or lifestyle healthcare projects might come into the play by end of 2020 and 2021. When people have already found a emergency response mechanism and are ready to move to the next level of health tech. About data and about what Mohammed said, I would agree to it, but I would still be a little more cautious about compliances, regulations, and people's ability to imbibe data. A little bit of a contrarian view on the options coming on the table. While COVID might be a catalyst in terms of having a lot of businesses jump into the health tech space, while VCs have had, I would say, a slightly poorer experience in the last 2 to 3 booms in different tech spaces, and hence might be a little more cautious this time around, rather than burning their fingers and supporting every possible business. So in the past, if I was evaluating 3 businesses every month, I might be evaluating 40, 50 businesses every month, and I would rather be a little more cautious, considering that every entrepreneur or every business that comes on the tech space might not be either backed by competencies or might not be backed by a will, but might just want to be a part of a growth journey and hence has jumped in. So that level of evaluation, that level of due diligence would only improve in this space. And hence, while deals would come in, the deals would not explode in this space the way I believe it to be happening in the next 3 years. It would still be, I would still be watchful for the space.
Great. Thank you, Karthik. Ali, you had something to add?
Yeah, I'm actually late for my session, but I didn't want to be rude and leave. So just before I jump off, wanted to say, so I understand and agree, but just to Jade's point, the reason why VCs, especially in our region, were not jumping into the health tech space wasn't because of the tech, but was more because regulatory challenges existed. And now that demand has just exploded with emergency COVID response, it opens up an avenue to deal with the regulators in a much more seamless manner where you could push new regulation in an emergency kind of environment. So I think that's why money is kind of coming in, because the needs there, the demands there, and the regulation can be worked with. As far as the VC space in general is concerned, there's an important fact to understand for all startups out there, which is venture capitalist funding has slowed down. That's a fact. The way people were spraying capital before, it's not going to happen. And let's be honest, globally and regionally, there was a bubble that was created before COVID recession hit, right? There was a bubble of valuations that were unrealistic and had no bearing on what their actual business model or profitability metrics were. So that bubble has now burst because of the COVID recession. And that also means that investors, as much as they're being careful with how they're spending, realize that there's an opportunity to get more, to get better deals today than they had 6 months ago. Because the reality is entrepreneurs need the funding for their businesses. That funding is drying up. There aren't many investors that are investing quickly. And there's a lot of opportunities to invest out there with every single entrepreneur knocking on the door of every single investor in the region. So as a result, that's slowed down activity, but it's also allowed investors to be more choosy with where they put their money and to negotiate a better valuation term for themselves, which is how the space today, not just for the health tech space, but just generally for investment in VC space across the board, has changed today as it was compared to maybe 8 to 9 months ago. So I think that's an important last point I'd like to mention. I'm sorry, but I've got to jump off for another call.
Hey, before you go, I really love the points you mentioned. The bubble has burst. So thank you so much. And the real evaluations are happening right now in the space. Thank you so much for adding that to our session today. And hope to see you soon again. Take care.
Absolutely. Thank you. Bye-bye.
Thank you. Bye. So, okay. So now that Ali has left us, I have a very different question for our panelists. Hope you can help me answer this question. What is the biggest myth about cryptocurrency? And how has the pandemic, the coronavirus pandemic, disrupted traditional investments? Jade?
I mean, look, I'm not an expert in cryptocurrency, so I might avoid that question. But rather your second question around sort of, investments now and in general, and just, what's the, how's the landscape? I've got to say, sort of Ali said a good point before he dropped off, is that, VC money is drying up, but that doesn't mean it's dry. I'm slightly contrarian to say that it's rather it's slowed down. There's still a huge amount of dry powder out there, right. But rather than spraying it like SoftBank did, they are much more discerning. Valuations will come down in the second half of this year, absolutely. So someone's looking for 100 million, they may have to accept 75 million. And I think it's getting sort of ever harder to do like moonshot projects, and it's ever harder for seed capital to be raised. A lot of VCs like to come in, with tickets of 5, 10, 20 million around the Series A, Series B, and beyond. And I think this region has always, to me, slightly lacked the companies for the slightly bigger ticket. I think the startups for VCs to get into slightly higher. When Kareem came bouncing along, lots of people just came in because it was big ticket and it was much easier to invest in. And I think we are seeing lots, even hundreds of startups at the moment who are struggling because seed money has, that's really dried up, because seed money would be from, sometimes friends and family, through to, high net worth individuals who may have, $2-3 million to put in. But I think, my one advice would be along the lines of, don't drop your valuation for the sake of dropping your valuation, but rather let the VCs come to a valuation point, or don't raise capital straight away. Why not raise a convertible? Right. Raise a convertible on the next, so that the next point of equity that comes in will formulate a valuation, and then let that valuation take hold. And I think, again, that's what the landscape's going to be looking like in the next sort of 6 to 12 months. But happy to hear my fellow panelists and see what they've got to say.
Thank you so much, Jade.
I agree. I agree with Jade on that. I share a very, very similar perspective. I think venture funding historically has been basis of hope and a vision. Somebody had a smart idea, I would bring an idea to the table with a square page, and he gets funding in millions. And that I think over the last few years has started drying in. Valuations have started coming in terms of results that people show, proof of concept that people show, competencies, bandwidth, team, execution, finesse, utilization of funds, and an ability to draw returns in a finite time. We cannot recreate an Amazon with the kind of money that somebody had that time. We now need to have a very clear finite timeline in which you're going to deploy somebody's funds and be answerable to them. Having a 1 out of 10 success and 9 failures is not something that even a VC can afford, however small the size would be. So valuations would come into picture, right businesses that are able to democratize. Healthcare in GCC needs a little bit of a democratization, which necessarily means affordable, with a level of finesse, with a level of execution speed, and more importantly, available and accessible to everybody. But today, if the government stops funding healthcare, and if the insurers get into creating a personalized insurance experience, then I'm sure healthcare might not be affordable to everybody. And hence, if a health tech fund or if a health tech startup is able to democratize and make the healthcare accessible, and is able to bring in that finesse, I think they would still find investors who would want to back them. Valuations, I would reserve my comments for next 6 to 12 months, maybe even 18 months, because I wouldn't jump the gun to a valuation. This I would say, is a very early stage for the healthcare, health tech business. But any health tech business that wants to invest would necessarily need to either have a proof of concept, a very strong proof of concept, and an equal skin in the game. You might not be able to invest $1,000 and have somebody invest $1 million on a piece of paper. That's not going to happen any longer. You need to either have a running business, or you need to have a very strong execution plan ready, which can be evaluated. And more often than not, if you go back to the drawing board with that kind of a plan, you might end up working for somebody, and that's not far. So yeah, that's the way I look at the health tech space in the next 12 months. And on cryptocurrencies, I wouldn't call myself even an amateur. I don't deal in that space, so absolutely no.
So, okay, thank you, Karthik. Good to hear about differentiating views on the valuation of the companies. Okay, thank you. I think, Mohammed, are you comfortable talking about the biggest myth about cryptocurrencies and how the pandemic has disrupted traditional investments and probably has brought a lot of benefits in investing into a Bitcoin or a crypto? Would you like to take that question? I'm just want to hear your thoughts on that.
Yeah, for sure. I'll take this question. And the thing is, yes, the crisis of pandemic of this COVID has triggered a lot of like adoption in tech. But to be very honest, there's hardly any difference in the adoption of cryptocurrencies in general. Yes, for the regular investors in this space, it is now a bit more, they're a bit more confident. Again, bit more confident, not that much confident. Still the same old speculative ups and downs are happening for last like few months. It will continue happening until and unless it gets regulated, and I'm not seeing that happening in next 2 3 years. So until and unless that's not happening for cryptocurrencies, I think the best move will be some centralized like cryptocurrency coming from China, from some other country, and bringing it as a like a value case to the for the adoption. That will be, I think, the one drive for the cryptocurrency industry in general. But like I'm also surprised that the COVID, where it brings a lot of like, and this shows that people are not considering cryptocurrencies as a tech adoption. They are considering it as economic adoption, and that is where it's so-called failure at the moment presenting to the world, that people are not seeing value of its economic side. Tech, yes, many people, like even regulators, are happy with the tech side, but it's the economic elements of the cryptocurrencies which are like the regulators, centralized regulators, are not comfortable with. So I think they will not come into the like a real comfort level until unless they see a centralized cryptocurrency backed by like a central bank appearing in a year or 2 year time. It gets adopted, the dynamics gets into the picture. What are the plus, what are the minuses of this economic side of this cryptocurrency for the central one, and then people will start decentralized cryptocurrencies as well. But I'm not very hopeful that COVID will bring any change to. People are saying a touch less experience with the cryptocurrencies. No, it's not there yet. And I don't think so until it gets regulated in different countries. It's not going to happen.
So regulations, government-backed cryptocurrencies, once they come into play, then probably people have faith in the altcoins. That's what you're trying to say. Okay.
Yeah, just to add, there is a like a circle or triangle basically. Like the first thing is tech. The cryptocurrencies arrived in 2009, right? Then came the technology entrepreneurs, the business models. Those brought the new cryptocurrencies for different purposes. I'm again very much savvy of this part, so I know that it's not only for the economic reasons. There are multiple use cases of cryptocurrencies and utilities. And then is the third part of the ecosystem, which is the regulators. There it gets stuck now, and this is not moving into the circle side, and into the circular motion is not happening for this industry until unless that third element gets satisfied or having a comfort with this phenomena. The first two, whatever they do, it is not going to happen for the ecosystem. And till then, the blockchain, the enterprise solutions of the blockchain, which is underlying like technology of the cryptocurrencies, that I think is having a good time for last year and will have even better time in next 2 3 years, and adoption will be like massive. I think maybe it will be a time for there will be a time for cryptocurrencies to jump again on the bandwagon of blockchain after 2 3 years to get into the groove. At the moment, it's like all enterprise blockchain solutions which regulator wants to explore, but where they want to implement. they don't even want to talk about cryptocurrencies.
Okay, good to know about your insights, Mohammed. Really helpful. So I have another next question. What about the best practices that you guys follow? Like, you know, when you are about to invest or reinvest, what are the best practices that you look at? Jade.
So, I mean, look, it's corporate governance, to be honest. You know, the way, you know, when I look at a company, I want to know who's on their board, either board of advisory or, you know, board of directors. I'm looking at, the corporate governance in terms of the policies that they've got on there, in terms of the guidance. You know, have they set themselves up so that, you know, if the CEO abruptly leaves, you know, the whole company doesn't, you know, collapse, for example. So, you know, I think, you know, lots of people forget just how important, you know, corporate governance is, and you know, it shouldn't be for large companies, and and certainly shouldn't just be for listed companies where, you know, there is, you know, sort of all those policies in place. Startups should. That's one. And the second thing, you know, is around data protection. Is the data that company X holding, or, you know, is looking to hold, is it safe? You know, are there policies around there? Is it, is a threat level from a cyber breach low? And, you know, if there is a cyber breach, what kind of insurance do you have around it? That comes with costs. That also comes with a set of expertise which most of the founders, don't have, or have a general understanding of it. That's why you've either got a CTO or you seek out external guidance. But I mean, there's no way I'm investing. I would invest in a company that doesn't have some sort of cybersecurity and a strong corporate governance, because in a flash your data could be stolen and your investment will be left under. And actually a good example, one that's happening now, is Boutique Cat in Kuwait. The last 24 hours they've come on investigation for a whole range of legal issues around fraud and money laundering. If they had a good corporate governance board, potentially that that may have raised a red flag or not. But it's worth highlighting that this was a high flying retail e-commerce company that literally has just been brought to its knees. It's very sad, very, very sad.
Oh, very sad. I mean, I was about to Google that. I would like to know more. But data governance, data safety, absolutely agree on those values. I mean, no compromise there. Thank you, Jade, for those inputs. Karthik, what are the best practices besides cybersecurity, a strong core team? What are the other practices, best practices?
So it's more or less similar to the way we evaluate any other deal, any other investment. Who are we dealing with? Why is the guy in the business? What does he look for in terms of a venture fund? Is he trying to outsource and fund his entire business through us? Is he trying to secure debt? Does the plan have a vision? Does the plan have a future? How soon are we going to be inundated with competition? How soon a Me Too can be created? What's the kind of sustainability that the project has? And more importantly, is there a merit in investing in a person who is out there seeking money? Has he shown pedigree? Has he shown execution fitness? Has he shown a promise to deliver on results? Because when we are investing, let's say a good health tech business might require anything between 5 to 50 million. Now, 5 to 50 million is a very broad spectrum investment. We would need to be very, very sure about the kind of people we are investing. More importantly, the level of compliances, the level of fiduciary control, and their counterbalances that the business has. And more importantly, have they delivered on any of the promises in the past in any other field, any other space that they've worked in? And that's more or less. And then obviously there would be a very strong due diligence that would need to be done. But in health tech space, unlike fintech, which is purely people dependent, technology dependent, health tech would still be a very large team dependent, people dependent, last mile connectivity, execution and operational related investment. And hence one needs to have a 360 view and might not take a decision very quickly, would want to invest in parts, would want to see some results first before committing a large sum. Because if somebody might have a very strong technology platform for all you know, a beautiful idea. But at the end, if the execution fails and the last mile doesn't happen, then the entire money is gone down the drain. So one would need to be a little more careful. I would definitely be careful.
So it doesn't apply to health tech. I think it applies to fintech or any other tech, I would say, when somebody's investing. These are some of the best practices to take into factor. Thank you, Karthik. Mohammed, over to you. What are the best practices you like to add on to whatever Jade and Karthik already mentioned?
Yeah, good point that I can only add, but because already Jade and Karthik has given the whole list which we have in our metrics for the best practices are for the evaluation of any startup or project to get them on board. Just to add, yes, we do also see the vision alignment between us and the startup. And as I said, like we have a specific target market and in terms of geography, in terms of like verticals we want to like move on. That's one thing we also consider like a big time. And second, very importantly, we are also now getting into the product or solution market fit as well. And that includes several things which already been mentioned by Karthik, that sustainability and so on and so forth. So these are the two things. And with the health tech specifically, I think again, being in the space for the last few months, the importance of having healthcare professionals, practitioners, advisors are of paramount importance. If you don't find them in the team, and especially core team, I think that project will not be that much like sustainable. So yes, it is important to have like a banker or some economist in the fintech solution of any other like vertical as well, like similarly. But in healthcare, it's a very, very specialized vertical. And not everyone can claim that they will be like many of us use the banking services and we can comprehend that process flow. But when it comes to the healthcare, I don't think so. It's a good, wise thing to do. So we should leave it to the professionals, and that's where I believe in healthcare you need to see this element of healthcare professionals, practitioners in that team.
I totally agree. Totally. You can't compromise with healthcare or health tech. So you need to have experts as advisors in the board. I totally agree. That's a very crucial point, Mohammed. Thank you so much for your insights today. That brings us to almost the end of the session, but I would like to know your closing remarks for today's session. Jade, what are your closing remarks for this session today?
Good question. I mean, look, I'm bullish on the sector. And I think, COVID-19, thankfully or not, has accelerated health tech in the MENA space. And I think, there's a lot of promise to be shown. It's exciting. I think the next few years we will see a next Kareem, come out hopefully, in the space and really look to dominate. I really think so. I think there is a good future. I think I'm pleased to see the VCs are looking at it. I'm pleased to see high net worth individuals are looking at it. And I think if these health tech companies fit the right metrics and model for investors, we have a bright future. So I'm excited. I really am.
Thank you, Jade, for those points. Karthik, closing remarks from you.
So the way Standard & Poor analyzes a country, I would say I would be cautiously aggressive. Aggressive, extremely bullish in the sector, watchful for the right deals. Compared to the e-commerce space where 1 out of 10 guys succeeded, I think this being led by a lot of healthcare specialists, I see a far larger success rate. But until unless the industry and the technology evolves and grows and multifolds, I think maybe in some time I would start seeing some level of stagnation coming in, because layers of technological evolution need to come in to ensure continuity. Otherwise, you would have funding coming in at one level and then there's no tomorrow.
Very right.
So
Bullish
cautiously
yet
aggressive.
cautious. Exactly. Bullish yet very cautious. Thank you. Closing remarks from you, Mohammed.
Yes, I would like to suggest few things for the new startups who are planning to jump into the bandwagon of HealthTech and MedTech. There are do research on your verticals. There are sub verticals within the HealthTech. There is no need to everyone to bring a telemedicine or telemedication app. I think there is going to be saturation soon in that sub vertical. The booming sub-vertical could be the Internet of Medical Things, wearables in general. We can see that will be, I think, a big thing to those who are into the ERPs and into the vertical of cloud. They can bring the cloud computing in healthcare. AI is a big going to be a factor. So if you are in the AI space, there is a lot of scope in that side. Data science and predictive analytics. I think that's going to be probably the biggest, once we have seen why governments failed in a good response, because they were not in preparation mode. And the only way they can prepare is by taking care of the data analytics of this disease, which can help them to prevent the next diseases outbreak or the next wave of this outbreak. So these are my 2 cents for the upcoming startups. It's a very obviously charming to say that I'm into the health tech now, but for the investors and for the startups, they need to see the sub verticals which they are going to choose now, and they should be having a very good specialization in that space, and they should be having a very, very strong business model.
Excellent. Thank you so much. Thank you so much, speakers. Jade, Karthik, Mohammed, for your insights today. I just have to announce that I've got a very good healthcare startup who is going to be speaking this Wednesday. I'm going to share all details. It's called dclinic.io. They've got Vic Rewards, a vitality coin, which is going to transform the healthcare industry. Please do tune in. I'm going to be sharing all the links with you later on. But do watch our shows every day at www.latoken.com/events, and some amazing sessions, amazing speakers, and amazing panels to come through. Thank you so much. We end the session today, and take care, stay safe and stay healthy, and keep talking, sharing knowledge. Thank you.
And stay safe, everyone.